Based on the provided historical and forecast data, the trend for Bitcoin appears to be bearish. The price has been declining consistently over the past 2 weeks, with the forecast suggesting further downward movement in the coming week. Support is at $84,300, and resistance is at $92,700. A long position is not recommended at this time. However, a short position could be considered with an entry price near the current market price of $84,700. The stop-loss order should be placed at $86,400, and the target price could be set at $79,100, based on the forecast. This strategy utilizes the bearish trend, the support and resistance levels, and the downward forecast. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast indicating further downward movement. The RSI is also below $50, suggesting bearish sentiment. Considering these factors, a short position could be considered. A suitable entry price would be around $294, with a stop-loss order placed at $302 to limit potential losses. The target price could be set at $265, based on the forecast and the downtrend. A secondary strategy could be implemented using the RSI indicator. When the RSI falls below $20, it signals an oversold condition, potentially indicating a price reversal. A buy signal could be generated if the RSI crosses above $20 after a period of oversold conditions. However, this strategy should be used with caution as false signals can occur. Finally, the Bollinger Bands can be used to identify potential price breakouts. A break below the lower Bollinger Band could confirm the downtrend and provide a further entry point for a short position. It is important to note that no single strategy guarantees success, and it is advisable to combine multiple indicators and techniques for a more robust trading approach. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI, while showing some fluctuations, remains below $50, indicating bearish sentiment. The Bollinger Bands are also contracting, suggesting a potential for a further price drop. Therefore, a bearish strategy is recommended. Enter a short position at the market price when STRK breaks below the support level of 78 cents. Set a stop-loss order at 80 cents to limit potential losses. The initial target price is 72 cents, aligning with the forecast data. Monitor the RSI for oversold conditions, potentially leading to a short-term bounce. However, maintain the overall bearish outlook and adjust the stop-loss and target prices accordingly based on market movements and technical indicators. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI is consistently below $50, indicating bearish sentiment. While the support level at $2,210 provides a floor, the resistance level at $2,380 suggests difficulty in breaking upwards. Considering these factors, a bearish strategy is recommended. A suitable entry point would be around $2,490, near the recent support level. The stop-loss order should be placed above the recent high at $2,570 to minimize potential losses. The target price could be set at $2,150, aligning with the forecast data and the downtrend. This strategy capitalizes on the bearish momentum and aims to profit from the anticipated price decline. Based on the provided data, XRP appears to be in a downtrend. Historical prices show a consistent decline, with the forecast data projecting further downward movement. The RSI, while currently above oversold levels, is trending downwards, suggesting weakening bullish momentum. The Bollinger Bands are contracting, indicating a potential for a breakout in either direction, but the overall trend suggests a more likely downside move. Considering these factors, a bearish strategy is recommended. Enter a short position at the market price around $2.32, with a stop-loss order placed at $2.38, above the immediate resistance and recent highs. The target price for this trade is $2.10, representing a significant support level. This strategy leverages the downtrend, the weakening RSI, and the potential for a breakout towards the downside. Based on the provided historical and forecast data for Binance Coin, a potential investment strategy emerges. The price has shown a downward trend in the recent past, with the forecast indicating further decline. Considering the support price of $571, a long position could be initiated at the entry price of $575. The stop-loss price should be set at $565 to mitigate potential losses. The target price could be set at $616, which represents the resistance level. Additionally, incorporating RSI and Bollinger Bands can refine the strategy. The RSI currently sits around $40, indicating a potentially oversold condition. Furthermore, the price is trading close to the lower Bollinger Band, suggesting potential for a bounce. Combining these indicators with the price trend analysis, the long position at $575 with a stop-loss at $565 and a target price of $616 appears to be a promising strategy. Based on the provided historical and forecast data for Stellar, a potential investment strategy could be employed. The price has shown a downtrend over the past 2 weeks, with the forecast indicating further decline. Given this trend, a short position could be considered. A suitable entry price would be around $0.295, with a stop-loss order placed at $0.315 to limit potential losses. The target price could be set at 25 cents, aiming to capitalize on the anticipated downward movement. Utilizing the RSI indicator, an oversold condition might present an opportunity to enter a long position. When the RSI dips below $20, indicating extreme bearish sentiment, it could signal a potential reversal. However, the current RSI levels are already in oversold territory, suggesting caution. The Bollinger Bands indicate a potential breakout below the lower band, further supporting the short position strategy. Therefore, the most efficient strategy appears to be a short position with an entry price of $0.295, a stop-loss at $0.315, and a target price of 25 cents. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the price falling below the support level of $3.42 several times. The forecast data also suggests further price decline in the coming week. Considering these factors, a bearish strategy is recommended. A suitable entry point for a short position would be at the current price of $3.42, with a stop-loss order placed at $3.54, the recent resistance level. The target price could be set at $3.10, based on the forecast data and the overall downtrend. This strategy leverages the potential for further price decline while managing risk with a defined stop-loss. Based on the provided data, Cardano appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price breaking below key support levels. The forecast data further reinforces this bearish outlook, predicting continued downward movement for the next week. Considering these factors, a short position is recommended. A suitable entry price for a short position would be around $0.683, the current resistance level. The stop-loss order should be placed at 70 cents, above the recent swing high, to limit potential losses. The target price could be set at $0.613, the strong support level identified in the data. This strategy utilizes the downtrend momentum and support/resistance levels to capitalize on potential price declines. Based on the historical and forecast data, Litecoin appears to be in a sideways trend with a slight upward bias. The support and resistance levels suggest a range-bound movement with potential for upward breakouts. The RSI indicator fluctuates within a healthy range, suggesting neither overbought nor oversold conditions. The Bollinger Bands indicate some volatility, but the price remains within the bands, suggesting a lack of strong directional momentum. Therefore, a buy strategy could be implemented with an entry price around $125, aiming for a target price of $129. The stop-loss order should be placed at $124 to limit potential losses. This strategy leverages the potential upward trend while managing risk by setting a clear stop-loss level. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. The support level of $2.29 acts as a potential floor, while the resistance level of $3.06 presents a significant barrier to upward movement. Therefore, a bearish strategy is recommended. A suitable entry point would be around $2.95, the first day of the forecast period. The stop-loss order should be placed at $3.06, slightly above the resistance level, to limit potential losses. The target price could be set at $2.29, the support level, aiming for a potential profit of approximately $22%. This strategy utilizes the downtrend and support/resistance levels to identify a potential buying opportunity. Based on the provided data, Aptos appears to be in a short-term downtrend. The historical price data shows a gradual decline over the past 2 weeks, with the forecast data suggesting continued downward pressure. The RSI indicator is hovering around neutral levels, but the declining trend in price suggests potential for further downside movement. The Bollinger Bands are narrowing, indicating a potential for increased volatility in the near future. Therefore, a bearish position strategy could be considered. A potential entry point could be around the support level of $5.65, with a stop-loss order placed slightly above the recent high of $6.15. The target price could be set at $5.41, the recent low point. This strategy aims to capitalize on the potential for a continued downtrend in Aptos. Remember that this is just a suggestion, and it is important to conduct your own thorough research and risk assessment before making any investment decisions. Based on the provided data, SE appears to be in a short-term uptrend. The price has been consistently increasing over the past 2 weeks, with support around $0.242 and resistance at $0.282. The RSI indicator is currently hovering around $46.90, suggesting that the asset is not overbought or oversold. Therefore, a long position could be considered. A suitable entry price would be around $0.258, the predicted price for March 1st. The stop-loss order should be placed at $0.242, the support level, to limit potential losses. The target price could be set at $0.282, the resistance level, aiming for a potential profit of approximately $10%. Based on the provided data, Ethereum Classic appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price decreases. The RSI indicator also supports this bearish outlook, with values consistently below $50. The Bollinger Bands further confirm the downtrend, as the price action remains below the middle band and the lower band is widening, indicating increasing volatility. Therefore, a short position is recommended. Enter a short position at the current market price of $18.70. Set a stop-loss order at $19.70, above the recent resistance level. The target price for this trade is $17.10, based on the forecast data and the potential for further price decline. Based on the provided historical and forecast data for Polygon, the trend appears to be bearish. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. Considering this trend, a short position could be considered. A suitable entry price would be around $0.272, which is the current support level. A stop-loss order should be placed at $0.277, slightly above the entry price, to limit potential losses. The target price could be set at $0.252, based on the forecast and the potential for further price decline. Utilizing the RSI indicator, a potential entry signal could be generated when the RSI falls below $30, indicating oversold conditions. However, this strategy should be used in conjunction with the trend analysis and not as a standalone indicator. The Bollinger Band suggests that the price is currently near the lower band, indicating potential for further downward movement. Therefore, a short position triggered by the RSI oversold condition near the lower Bollinger Band could be a strong entry point. Based on the provided data, AEVO appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, and the forecast data suggests this trend will continue in the coming week. Support is holding at 15 cents, but the RSI is showing bearish momentum, hovering below $40. Considering these factors, a short position could be considered. A good entry point for a short position would be at $0.146, the highest point in the forecast week. A stop-loss order should be placed at 15 cents, above the support level, to limit potential losses. The target price could be set at $0.124, based on the forecast data and the downtrend. This strategy combines the trend analysis, RSI indicator, and price forecast to maximize potential returns while managing risk. Based on the provided data, optimism appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The RSI indicator, while currently above $30, has been hovering in oversold territory recently, indicating potential for further decline. The Bollinger Bands, with the price consistently trading below the middle band, further support this bearish outlook. A potential strategy could involve a short position initiated at the entry price of $1.11, with a stop-loss order placed at $1.14 to limit potential losses. The target price would be set at $1.03, based on the forecast data and the downward trend. This strategy leverages the combination of the downtrend, RSI oversold conditions, and the price action within the Bollinger Bands. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further price drops. The RSI indicator is hovering around oversold levels, indicating potential buying pressure, but the overall trend suggests caution. Therefore, a conservative strategy would be to wait for a potential bounce from the support level of $0.198. A buy order could be placed at $0.199 with a stop-loss order at $0.195. The target price could be set at $0.215, aiming for a potential $8% gain. This strategy combines the oversold RSI signal with the support level, while managing risk with a tight stop-loss order. Based on the provided historical and forecast data, Solana appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast indicating further downward movement. The support level of $135 has been tested several times and holds, suggesting a potential bounce. Therefore, a long position could be considered with an entry price near the support level of $135. A stop-loss order should be placed below the recent swing low, around $132, to limit potential losses. The initial target price could be set at $148, representing a potential upside of 10%. This strategy utilizes the support level as a potential entry point and incorporates risk management with a stop-loss order. Based on the provided data, Jupiter appears to be in a downtrend. The historical prices show a consistent decline, and the forecast data predicts further price decreases. The RSI indicator is currently hovering around $40, suggesting that the asset is not oversold but could be nearing oversold conditions. The Bollinger Bands show price action consistently below the middle band, further supporting the downtrend thesis. A potential strategy could involve entering a short position when the price breaks below the current support level of $0.689. The stop-loss order should be placed above the recent swing high, around $0.744. The target price could be set at the next significant support level, which appears to be around $0.652. This strategy utilizes both the trend and support/resistance levels to identify a potential entry point. It's important to note that this is just one possible strategy and should be carefully considered in conjunction with other market factors and risk management principles. Based on the provided data, Render appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI, hovering around $30, suggests oversold conditions, potentially indicating a short-term bounce. However, the price action within the Bollinger Bands indicates a potential continuation of the downtrend. Therefore, a cautious short position is recommended. Enter a short position at $3.70 with a stop-loss order placed at $3.85, aiming for a target price of $3.20. This strategy capitalizes on the potential continuation of the downtrend while mitigating risk with a tight stop-loss. Remember that this is a high-risk strategy, and careful risk management is crucial. Based on the provided historical and forecast data for Solana name service, a potential investment strategy emerges. The price has shown a downward trend over the past 2 weeks, with the forecast suggesting further decline in the coming week. The RSI indicator, currently hovering around $30, suggests that the asset might be oversold, presenting a potential buying opportunity. A long position could be initiated at the support level of $0.113, with a stop-loss order placed at $0.110 to limit potential losses. The target price could be set at $0.125, aiming to capitalize on a potential bounce back. However, it's crucial to consider the Bollinger Bands, which indicate heightened volatility. The price is currently trading near the lower band, suggesting a potential for further downward movement. Therefore, a cautious approach is recommended, and the position size should be adjusted accordingly. Monitoring the RSI and Bollinger Bands closely will be essential for managing the risk and optimizing potential profits. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below both the support and resistance levels. The forecast data also suggests a continuation of this downtrend in the coming week. Given this bearish outlook, a short position strategy could be considered. Enter a short position at the market price when the price is near the resistance level of $0.239. Set a stop-loss order at $0.247 to limit potential losses. The target price for this trade could be $0.172, based on the predicted low point in the forecast data. This strategy leverages the potential for further price decline in Doge-Coin. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI, hovering around $35, indicates the asset is not oversold, suggesting potential for further decline. The Bollinger Bands show price action consistently below the middle band, reinforcing the downtrend. A suitable strategy would be to enter a short position at the opening price on March 1st, with a stop-loss order placed at $0.0000850 to limit potential losses. The target price would be set at $0.0000750, aiming to capitalize on the predicted downward movement. This strategy leverages the downtrend identified in the historical and forecast data, coupled with the RSI and Bollinger Bands indicators. Based on the provided data, Shiba Inu appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $0.0000137. The forecast data also indicates a continued downward trend for the next week. Therefore, a bearish strategy is recommended. A suitable entry point for a short position would be around $0.0000142, the first day's forecast price. The stop-loss order should be placed at $0.0000145, slightly above the recent high. The target price could be set at $0.0000132, the lowest forecast price for the week. This strategy combines the bearish trend analysis with the support and resistance levels, aiming to capitalize on the potential price decline. The provided data suggests a potential downtrend for dog with hat. Historical prices show a consistent decline, with the recent forecast prices further reinforcing this bearish outlook. The support price at $0.551 provides a potential floor, but the RSI consistently remains below $30, indicating oversold conditions and a potential for further downside. Considering these factors, a short position could be considered. A suitable entry price would be around $0.584, the recent high, before the predicted decline. A stop-loss order should be placed above the support level at $0.551 to limit potential losses. The target price could be set at $0.463, the predicted low point for the upcoming week, aiming for a potential profit of approximately $20%. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. Support and resistance levels indicate a potential bounce around the $0.0025 support level, but the overall outlook remains bearish. A suitable strategy would be to short Doge-Coin at the market price near the $0.0029 level. Set a stop-loss order at $0.0031 to limit potential losses if the price unexpectedly rallies. The target price should be set at $0.0024, aligning with the forecast and potential support level. This strategy leverages the bearish trend and potential support bounce, aiming for a $20% return. Based on the provided historical and forecast data, Near Protocol appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. The RSI indicates the asset is not oversold, but the Bollinger Bands suggest a potential for further price decline as the price is nearing the lower band. Therefore, a cautious approach is recommended. A short position could be initiated at the entry price of $3.03 with a stop-loss order placed at $3.06 to limit potential losses. The target price for this short position is $2.66, the predicted low for the next week. This strategy leverages the potential for continued downward price movement while managing risk through a defined stop-loss. Based on the provided data, Internet Computer appears to be in a downtrend. The historical prices show a consistent decline, with the forecast prices further indicating a bearish outlook. The RSI is hovering around oversold levels, suggesting potential for a short-term rebound, but the overall trend remains downward. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around $6.45, close to the predicted low for March 1st. A stop-loss order should be placed at $6.67, above the recent swing high, to limit potential losses. The target price for this trade could be set at $5.97, aligning with the predicted lows for the week. This strategy capitalizes on the downtrend while managing risk through a well-defined stop-loss. Remember to always conduct thorough research and consider your own risk tolerance before making any investment decisions. Based on the provided historical and forecast data for Injective, a bearish trend appears to be forming. The price has been steadily declining over the past 2 weeks, with the forecast predicting further downward movement. The RSI indicator is currently hovering around $40, suggesting that the asset is not oversold but lacks strong bullish momentum. The Bollinger Bands indicate a narrowing range, suggesting a potential for increased volatility in the near future. A conservative strategy would involve entering a short position at the current market price of around $13.60, with a stop-loss order placed at $14 to limit potential losses. The target price could be set at $12.50, based on the forecast and the support level of $13. This strategy leverages the bearish trend and potential for price decline while managing risk through a defined stop-loss order. Based on the provided data, Bitcoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI is currently below $50, indicating bearish sentiment. The Bollinger Bands are also contracting, suggesting a potential for a break in either direction. We will initiate a short position when the price breaks below the support level of $352. The stop loss will be placed above the recent swing high at $375. The initial target price is set at $330, the forecast low for the upcoming week. If the price fails to break below the support level, we will wait for a confirmation signal from the RSI or Bollinger Bands before considering a long position. The RSI oversold level of $20 could indicate a potential buying opportunity, while a bounce off the lower Bollinger Band could also signal a reversal. In this scenario, the entry price would be above the recent swing low, the stop loss would be placed below the recent swing low, and the target price would be set based on the resistance level. Based on the historical and forecast data for THETA network, the trend appears to be bearish. The price has been steadily declining over the past 2 weeks, and the forecast suggests that this trend will continue in the coming week. The support level of $1.15 is likely to hold, but the resistance level of $1.26 is unlikely to be broken. A good entry point for a short position would be around $1.17, with a stop-loss order placed at $1.19 to limit potential losses. The target price for this trade would be $1.02 based on the forecast. Utilizing the RSI indicator, we see that THETA network is currently trading in oversold territory. However, the RSI has been consistently below $30 for the past few days, indicating a potential for further downside. The Bollinger Bands are also suggesting a bearish outlook, as the price is trading below the middle band and the bands are narrowing, indicating a potential for a breakout to the downside. Combining these indicators with the overall trend, a short position with an entry price of $1.17, a stop loss at $1.19, and a target price of $1.02 appears to be a good risk-reward opportunity. Based on the provided data, WorldCoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicates the asset is not oversold, suggesting further downside potential. The Bollinger Bands are contracting, which could signal a potential breakout in either direction, but given the overall downtrend, a breakout to the downside seems more likely. Therefore, a bearish position strategy is recommended. Enter a short position at the market price around $1.15. Set a stop-loss order at $1.18 to limit potential losses. The target price is set at $0.977 based on the forecast data and the anticipated continuation of the downtrend. This strategy aims to capitalize on the potential for further price decline in WorldCoin. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical prices show a consistent decline, and the forecast data predicts further price drops. The RSI indicator also supports this view, with values consistently below $50, indicating bearish momentum. The Bollinger Bands are contracting, suggesting a potential period of consolidation before further downward movement. Therefore, a short position is recommended. Enter a short position at the market price when the price breaks below the support level of $0.176. Set a stop-loss order at $0.185, slightly above the recent swing high, to limit potential losses. Target a profit of $0.161, which aligns with the predicted price levels in the forecast data. This strategy capitalizes on the prevailing downtrend and aims to profit from the anticipated price decline. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price breaking below key support levels. The forecast data further reinforces this bearish outlook, predicting continued price declines in the coming week. Considering these factors, a short position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of 66 cents dollars. Set a stop-loss order at 68 cents dollars to limit potential losses. The initial target price is 58 cents dollars, which is based on the historical price action and the forecast data. Monitor the RSI indicator closely. If it dips below $30, it could signal further downward momentum and warrant adjusting the stop-loss order lower. Additionally, watch for the price to move below the lower Bollinger Band, which could indicate a stronger bearish move. Based on the provided historical and forecast data, Polkadot appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests a continuation of this trend. The support level at $4.43 has been holding, but the resistance at $6.17 is proving to be a significant barrier. Considering these factors, a short position is recommended. Enter a short position at $4.88, the closing price on February 27. Set a stop-loss order at $4.95 to limit potential losses. The target price for this trade is $4.55, based on the forecast price for March 4th. This strategy utilizes the downtrend identified in the price action and the support/resistance levels to define entry and exit points. Based on the provided data, Filecoin appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further price drops. The RSI, hovering below $50, indicates bearish sentiment. Considering these factors, a short position could be taken. A suitable entry price would be around $3.15, slightly above the support level of $3.13. The stop-loss order should be placed at $3.26, the recent swing high, to limit potential losses. The initial target price could be set at $2.98, the predicted low for next week. For a more robust strategy, we can combine this with the Bollinger Bands. The price is currently trading near the lower band, suggesting potential for a bounce. However, the downtrend remains intact. Therefore, a short position can be entered with a stop-loss at $3.26 and a target of $2.98, aiming to capitalize on the potential price dip. The RSI strategy can be used as a secondary indicator to confirm potential entry and exit points. Based on the provided historical and forecast data for Conflux, a potential investment strategy emerges. The price has been generally trending downwards, with a forecast suggesting further decline in the coming week. The support price of $0.111 provides a potential entry point. A stop-loss order should be placed below the support level at $0.109 to limit potential losses. The target price could be set at $0.105, aligning with the forecast decline. Additionally, the RSI indicator suggests that the asset is not currently oversold, indicating a potential for further downside. The Bollinger Bands show the price is trading near the lower band, suggesting a potential for a bounce. However, the overall trend remains bearish. Therefore, the strategy prioritizes the entry based on the support level and the downward forecast, with a stop-loss below the support and a target price aligned with the forecast decline. Based on the historical and forecast data, Ethereum name service appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $20.50 has held, indicating some potential for a bounce, but the overall trend suggests a bearish outlook. A potential entry point could be around $22.50, below the recent lows, but above the strong support level. A stop-loss order should be placed at $20.50 to limit potential losses. The target price could be set at $19.50, aligning with the forecast and the downward trend. Additionally, the RSI suggests the asset is oversold, potentially indicating a short-term bounce. However, the Bollinger Bands indicate a continued downward trend, with the price trading below the middle band. Combining these signals, a strategy focused on a short position with a tight stop-loss and a target aligned with the forecast appears to be the most efficient approach. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the forecast data suggesting further downward movement. The support price of $21.90 provides a potential floor, while the resistance price of $23.50 acts as a barrier to upward movement. Considering the RSI, which is currently below $40, indicates a potentially oversold condition. A buy signal could be generated if the RSI crosses above $30, suggesting a potential reversal in the downtrend. The Bollinger Bands show price action consistently trading below the middle band, further supporting the bearish outlook. A potential entry point could be around $22, with a stop-loss order placed below the support level at $21.90. The target price could be set at $23.50, aiming to capture a potential upward move towards the resistance level. Based on the provided data, Bitcoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below both the support and resistance levels. The forecast data also suggests a continuation of this downtrend in the coming week. Considering the RSI, which is currently below $40, indicates oversold conditions. Therefore, a potential strategy could be to enter a short position when the price reaches $0.0283, the first forecast price, with a stop-loss order placed at $0.029, slightly above the support level. The target price could be set at $0.0248, the lowest forecast price. This strategy leverages the downtrend, the oversold RSI, and the potential for further price decline. Based on the provided historical and forecast data, PENDLE appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $2.75 is crucial to watch. A break below this level could signal a further acceleration of the downtrend. Therefore, a short position could be considered. A good entry point for a short position would be around $3, with a stop-loss order placed above the recent resistance level at $3.39. This would limit potential losses if the price unexpectedly rallies. The target price could be set at $2.50, which represents a significant downside move based on the current trend and forecast. Alternatively, you could use the RSI indicator, entering a short position when it crosses below $30, with a stop-loss above the last swing high and a target price at the next support level. Remember to always manage your risk and adjust your strategy based on market conditions. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $0.307. The forecast data also suggests a continued downward trend in the coming week. Considering these factors, a short position strategy could be considered. A potential entry price for a short position would be around $0.308, near the recent support level. The stop-loss order should be placed above the recent high of $0.315 to limit potential losses. The target price could be set at $0.264, based on the forecast data. This strategy utilizes the downtrend and the forecast data to identify a potential entry and exit point. Based on the provided data, Decentraland appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding at around $0.285. The forecast data suggests this downtrend may continue, with prices predicted to fall below $0.285 in the coming week. Considering this, a bearish strategy is recommended. A suitable entry point would be at the current price of $0.287, with a stop-loss placed at $0.296, slightly above the recent resistance level. The target price would be set at 26 cents, based on the forecast data and the continuation of the downtrend. This strategy utilizes both the price action and the forecast data to identify a potential short selling opportunity. Remember that trading cryptocurrencies carries significant risk, and this strategy should be implemented with caution and proper risk management. Based on the provided data, ENG coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.106 on several occasions. The forecast data also suggests a continued downward movement in the coming week. Considering these factors, a bearish strategy might be more suitable. A potential entry point could be at $0.111, the first forecast price. The stop-loss order should be placed at $0.116, the resistance level, to limit potential losses. The target price could be set at $0.106, the strong support level. This strategy combines the trend analysis with the support and resistance levels to identify a potential entry and exit point. It's important to note that this is just one possible strategy, and traders should always conduct their own research and risk assessment before making any investment decisions. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicates that the asset is not oversold, suggesting that a short position could be profitable. Therefore, I recommend entering a short position at the market price, with a stop-loss order placed at $8.21, resistance level, and a target price of $6.83, based on the forecast data. This strategy leverages the downtrend and aims to capitalize on the predicted price decline. The stop-loss order will limit potential losses, while the target price represents a realistic profit objective. Based on the provided historical and forecast data, Chainlink appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support price of $14.50 has been holding, suggesting a potential bottom in the short term. A long position could be considered if the price rebounds from the support level. A suitable entry price would be around $14.70, with a stop-loss order placed at $14.30 to limit potential losses. The target price could be set at $16.50, aiming for a potential upside of approximately $12%. This strategy utilizes the support level as a potential buying opportunity and sets a conservative stop-loss to manage risk. The target price is based on a potential reversal of the downtrend and a return to a previous resistance level. Based on the provided data, Aave appears to be in a downtrend. Historical prices show a consistent decline from February 14th to February 27th, with the forecast data projecting further downward movement. The RSI, hovering below $50, supports the bearish sentiment. The price consistently trades below the $20 day moving average, not provided in the data but can be calculated, further reinforcing the downtrend. A potential entry point could be around $205, near the support level and the predicted price for February 28th. A stop-loss order should be placed at $202, below the support level, to limit potential losses. The target price could be set at $175, aligning with the forecast price for March 3rd and representing a significant downside potential. This strategy utilizes the combination of trend analysis, support and resistance levels, and RSI to identify a potential high-risk, high-reward trading opportunity. Based on the provided data, EOS appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data projects further price decreases. The support price of $0.556, combined with the RSI hovering around oversold levels, suggests a potential buying opportunity. Therefore, a long position could be initiated at the support level of $0.556 with a stop-loss order placed at $0.554 to limit potential losses. The target price could be set at $0.60, aiming for a $7% profit. This strategy combines the support level with the oversold RSI to identify a potential entry point. Based on the provided historical and forecast data, Tron appears to be in a sideways trend with a slight upward bias. The price has been fluctuating between the support level of $0.222 and the resistance level of $0.246. The RSI is currently hovering around $40, suggesting that the asset is not overbought or oversold. The Bollinger Bands are relatively tight, indicating low volatility. Therefore, a strategy based on a breakout above the resistance level of $0.246 would be most suitable. Enter a long position at $0.246 with a stop-loss order placed at $0.222 to limit potential losses. A target price of 26 cents could be considered, aiming for a potential profit of $6%. This strategy capitalizes on the potential upward momentum while managing risk effectively. Based on the provided historical and forecast data, Suncoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue for the next week. The support price of $0.0172 provides a potential buying opportunity, especially considering the RSI is hovering around oversold levels. Therefore, a long position can be initiated with an entry price of $0.0172. The stop-loss order should be placed at $0.0170 to limit potential losses. The target price could be set at $0.0185, which represents a 7.5% profit margin based on the recent price action. This strategy combines the support level, RSI oversold condition, and potential for a price reversal.